JB!
Derek, how are you doing?
I'm fine, how are you?
Nice to see you.
Nice to see you too. And where are we today?
Well, today, Derek, we're here in Carmel, Utah.
Carmel, Utah. It certainly does not look like Carmel, Utah to me. So where are we today?
Well, we're back here in Edinburgh, in front of the birthplace of Alexander Graham Bell.
We are actually in front of the birthplace of Alexander Graham Bell. Now, Alexander Graham Bell, as many of you will know, the Scots have been prolific inventors over the years. And Alexander Graham Bell is the inventor of the telephone. And he was born here on the 3rd of March, 1847. So there you go, JB.
You can both read and write.
I can read and write. I learnt the skill recently, so I'm keen to show it off. Thank you for pointing that out. Anyway, enough of this. Shall we talk investment?
Let's talk investment.
Great.
Okay, let's look now at derivatives within portfolios. Now, we use derivatives, or fund managers use derivatives, largely for efficient portfolio management, EPM. Now, what are some of the challenges that can come from using derivatives when you're trying to adhere to the ESG principles?
Bonus points for introducing yet an acronym. Let's talk about efficient portfolio management another day, because that's an interesting subject. But you're right. Ultimately, derivatives are actually in people's investments, in their portfolios, in their funds, far more than they perhaps realise today. An investor who buys a UK equity fund or a multi-asset fund perhaps doesn't fully appreciate that there are derivatives being invested into. Now, we've seen over the last couple of decades changing regulation about this. 2003 was probably a cornerstone moment in regulation. What that allowed fund managers to do was to increase the amount of derivatives they use. And importantly, to your point, it allows them to use derivatives beyond just efficient portfolio management, i.e. they don't just have to hedge with derivatives. They can use it much more progressively, much more tactically than they were able to before. So let's just start by saying that derivatives are in people's portfolios much more than they were yesterday. We'll cover derivatives in another session, but derivatives, the clue is in the name. It is a contract that derives its value based on another asset. That's the easiest way I could perhaps put it. And depending on how that asset behaves, then derives what the contract will pay you. So that's what we mean by derivatives. And derivatives can be applied to all sorts of asset classes. Bonds, equities, currency, money markets, even property. They're everywhere. And so what we've seen over the last 10 years is derivatives have become very integral within asset management, within the funds that investors hold today. But investors aren't necessarily aware of that. Why is that important from an environmental, social governance point of view? Because if you look through the majority of asset managers today, they do not apply their ESG test to the way they implement derivatives.
Right, okay.
The reason being is because they perceive derivatives to not be a physical holding. It's only contractual. And therefore, somehow, the rules don't apply. I would challenge that premise. I think that if you're investing into a particular country, a sector, a company, an index, you need to be applying the same ESG rule as if you were holding that asset directly yourself. But that's not happening today. And I think what we'll see over the next 3 to 5 years is that asset owners and asset managers will look at this much more closely and then start asking those questions. Have you applied ESG to that derivative contract where it's then invested? Have you applied your ESG against the counterparty, the person who provides you that derivative contract? So I think this is an area of great change, not being debated much right now, but it will.
Yeah, no, absolutely. Well, it's time for another acronym, JB.
Oh dear.
We might as well, we're going through them today. Principles for Responsible Investing. Now, established in 2015, I believe, or PRI for short. Could you just talk a little bit about this and its impacts and what effects are likely to come as a result of this?
So let me percolate you an answer on this, because I can hear the coffee machine in the background.
You can, it's making me want a coffee, actually.
I'm getting thirsty. Principles of responsible investing. Again, the clue in some ways is in the name. Again, those principles were founded by the UN.
Yeah.
They are then operated by a non-government organisation called the PRI, unsurprisingly. It sets out a number of expectations, guidance and rules for fund managers and for asset owners and how they should invest their portfolios, how they should monitor their portfolios, how they should select fund managers, how they should report on the positions that they take. If we consider that the PRI is basically a body that points towards what industry best practice looks like. They're not the police. They are not trying to police the industry, but they are trying to indicate what best practice looks like. And both asset owners and asset managers then subscribe to PRI, report on an annual basis, whether they're incorporating environmental social governance into the different layers of their business, including stewardship, which is the engagement of companies, including integration into their investment processes, and indeed for asset owners, have they considered ESG when they select, appoint, and monitor their fund managers?
Sure, no. Obviously a subject you know a lot about, JB. This is a particular
A
area of
smidge.
expertise.
I think we're at the tip of the iceberg. I'd like to think I know a bit more than most, but not as much as many.
Yeah, I believe you've got some training on this coming up.
Yeah, I mean, I think one of the great gaps in the ESG debate right now is what is the duties and responsibilities of asset owners. They've kind of been the great quiet of the industry. They really haven't been nearly as proactive as they need to be. We've seen some innovation in some areas, but in general. And why is that? Well, the reason is because asset owners, aren't fully aware of what the responsibilities are going to look like. We're seeing a raft of new regulations coming from the Department of Work and Pensions, the pension regulator, the FCA, and indeed the PRA, which are the two main regulatory bodies in the UK. So looking forward, asset owners are going to have to think much more about how they select fund managers, understanding the positions that they take, considering how companies are engaged for positive change, how they vote on key resolutions. And we've seen some very important resolutions, for example, with the big oil companies in terms of how they're addressing the 2% climate change target, which has obviously been stipulated through another acronym known as COP23, very catchy.
Sounds like a helicopter.
Or some sort of 80s crime show. So asset owners right now are unsure of what they need to do. And I'm putting together a course that will help them think about how to build a responsible investment framework, how to meet the requirements of the PRI, how to develop that selection, appointment and monitoring framework for their fund managers, how to engage them on controversies, carbon exposures, voting, and really try to give them somewhere to start, a starting point to say, right, if tomorrow you want to redesign your investment proposition based on environmental social governance or on sustainable development goals, or both, how do you do it? And we're putting together a one-day executive course with a non-government organisation here in Scotland. We're looking to make Scotland the epicentre of best practice for ESG and sustainable investing.
Great, I mean, that's fantastic, JB. That's really admirable. Well done. Well done.
Hopefully the course is quite good too.
I hope so. I hope so. Space for me.
We'll see.
Thank you very much, JB. Very insightful and very, very enlightening, really, about this particular area that I'm not sure everybody is quite so familiar with. Thank you very much for watching today's DB Meets JB. If you're looking for any assistance on your sales strategies or skills or pitching or presenting, please get in touch. And JB is obviously, as he mentioned, putting together a course on ESG, which no doubt will be very, very informative, and I would imagine will be well subscribed as well. So thank you very much for watching today. I hope you found the video useful. If you did and you'd like to give it a like in the little thumbs up beneath, we very much appreciate that, just to ensure that we're on the right track. Thank you.